Hey all, my name is Paul Borosky and I am the owner of Quality Business Plan as well as the author of The Beginner's Guide to Understanding Financial Statements and Financial Ratios, which I've published on Amazon.com, as well as the author of various company reports, company financial reports, including Amazon.com 2021 financial report. And what I'd like to do today is to give you all some tips and tricks on analyzing Amazon.com's last 5 years worth of revenues and cost of goods sold. So the way the video is going to work is I've got a snippet of the Amazon.com's last 5 years of revenues and cost of goods sold. I've comparing them to a couple of metrics. So we'll run through that. From there, we'll sum it up, wrap it up, and call it a day. All right. So as promised, Amazon.com 2021. What I've done is I went out and I've done a little bit of research, and I've gathered Amazon.com's income statement and balance sheet for the last 5 years. And for this particular video, what I've done is I've summarized their revenues for the last 5 years. So in 2017, Amazon had revenues of about $177.8 billion. In the next year, the organization would increase their revenues by 30%. In 2019, the revenues would grow by another 20%. In 2020, the revenues would grow again at 37.6%. And then in 2021, the revenues are growing at a 21.7% growth rate. On average, the organization is pulling down to 27.7% growth rate for the last 5 years. So this is a real good growth rate, well above average for a multinational organization such as this. So one of the trends that really jumps out at me is it seems like the organization, the company, they go up, their growth rate is 30%, then it drops down about 10 points, then it jumps up to 37%, and it goes down to 21%. So if we're looking at the trend in and of itself, we could expect that, or it has an above average likelihood that the organization's growth rates should exceed 30 to 35% in the next year, just based on the previous trends. Regardless, 27% average revenue growth rate, pretty stellar for an organization. The next thing I wanted to take a look at is going to be the cost of goods sold. So for the cost of goods sold, Amazon, their cost of goods sold in 2017, 111 billion. Then it just climbed from there, 139 billion, 165 billion, 233, and then 272 billion. So that doesn't tell us a whole heck of a lot if we just look at that line item. So what we need to do is we need to have some kind of a comparison and as well as a growth rate. So what I do when I analyze the cost of goods sold for the financial report that I've published on my website, what I do is I compare it both to the revenues as well as a growth rate as well. So in looking at the growth rate, on average, their cost of goods sold has grown at about a 25.2% growth rate, whereas their revenues are growing at a 27.7% growth rate. Since their revenues are growing at a faster pace as compared to their average cost of goods sold, that tells us over the last 5 years, they've increased their gross profit margin, which is a good thing for the organization. If they can keep this trend going, that's going to be, it's going to be even better for the organization. And then just looking at a year-by-year growth rate, revenues outpaced cost of goods growth in 2018, in 2019. Their revenues didn't grow as fast as their cost of goods in 20, but again in 2021 the revenues outpaced cost of goods sold as well. So again, we've got an annual trend, almost an annual trend, 3 to 4 years. Their revenue growth is exceeding their cost of goods growth. So that is again an excellent trend. The next thing that I'd take a look at is going to be their cost of goods as compared to revenues. So for this right here, they've got a 62% cost of goods as compared to revenues. For this percentage, we want it as low as possible. And so it went down a little bit in 2018. And then this percentage went down a little bit again in 2019. It jumped up 1 point and then went down even further. So this tells us that the organization, they're controlling their raw material costs, whether it's their payments to their suppliers or just increasing their prices charged on products sold on their platform, or even increasing even the raw material for their their various electronics that they sell. whatever it is, the organization is doing a real good job with the cost of goods sold and also with their revenues as compared to it. All right, so hopefully that was a little bit insightful and gave you some thoughts and ideas as to how to approach analyzing the revenues and cost of goods sold when you do need to analyze Amazon.com to decide whether you're going to invest or if it's for a school project or what have you. So let's see here. So for more fun with finance, if you do want some more thoughts and ideas and help in writing up and understanding financial statements and financial ratios, again, my book is on Amazon.com, and it's Beginner's Guide to Understanding Financial Statements and Financial Ratios. If you do want an Amazon.com financial report or the Beginner's Guide, I do offer that for sale on my website at qualitybusinessplan.com/Amazon.com analyst, or you can just go to my website at qualitybusinessplan.com/public company financial reports. I do have financial reports about 15-20 of the major companies in the U.S. All right, so hopefully this information was helpful. As always, give me a thumbs up on YouTube and have a great day. Thank you.